And what's going on, everybody? It's your boy, Danny the Bull, here with my man, Ron. Say what's up, Ron. Welcome to the
Hey,
channel.
what's up? Thanks, Danny. Thanks for having me on. And what's going on, everybody?
Yeah, so for those of you that don't know Ron, he's a big crypto head. He's into technical analysis. He's been around on Twitter for a while. We're going to hear his insight into the whole market, Bitcoin, Ethereum. We're going to talk some OMI, get into some charts. So why don't you introduce yourself to the people? Tell them, who you are, how your journey in crypto started.
Hey, what's up, Danny? So I'm Ron. I know I don't have a YouTube channel or anything. I'm not really an influencer on Twitter or anything, but I know a lot of influencers and a lot of YouTubers and Twitter people and things like that. Um, I actually bought Bitcoin for the first time in like 2010, I think, but not really as like investment purposes. I bought some to get something off the dark web actually. So technically I've been in Bitcoin for a really long time, but I didn't really start trading it and really investing and thinking in those terms until 2019. But
2019.
yeah. And Omi and Vivi, I'll be honest, I don't remember how I found out about Omi. I know I heard about it in a few places, and I think that's kind of what it was. I heard about it two or three different places and started looking into it. And then like you and a lot of other people saw the potential at that time anyway. And
Yeah.
yeah, that's how I got into it. So I think I was in Omi like January 2021, maybe February, somewhere around that time frame.
So you got in. So you found OMI first, and then you got into VV. But are
Mhm.
you also into the collectible side of things?
Yeah. At first, when I was just worried about Omi, I downloaded VV, but I looked at it a few times. Wasn't really my thing. But as the prices started to go up, I mean, this was still early on, like in the first season. I got into it and started doing some drops. Then I got really into it, especially when the comics came out. Then I got really into it.
Yeah. So you're more into the comic side of things than the collectibles. Do you still collect now, even in this bear market, or have you like cooled off?
I've DCA'd on the way down. I had a pretty big account and I sold the whole account at the top of the market in
Wow.
January when the market was on fire. Yep. And then I just kind of I waited. I didn't buy anything for 3 or 4 months, and after that, then I started to DCA in. So I've DCA'd VV on the way down. I got a pretty big account.
So you
As far as
you're still holding a bunch of collectibles in there.
yeah, yeah, but I'm not really buying. I'm not putting any new money in it. Not now.
Hmm.
Maybe very little here and there, but I got a pretty big account. If it pops, then I'm good. I don't really need to keep putting it in. As far as comics versus collectibles, my opinion is I think that comics are a little safer and that collectibles have a larger potential ROI.
Yeah.
So I'm probably like 60-40 comics to collectibles.
And how do you feel about like the whole state of VV at the current moment? Are you frustrated, or are you optimistic that they'll handle business?
I'm not as bullish as I once was. I'll say that, but I'm not ready to jump ship, abandon the project, sell everything at a huge loss or anything like that. I mean, they got their issues. Some things are really puzzling. Why things aren't on the IMX marketplace, MCP, OMI utility. I mean, some things I can understand, but other things are just quite puzzling. And the thing that's worrying is this a strength for everybody was the team, and now that seems to be the biggest downfall for a lot of people. And I don't know what to make out of it. And I actually have a comparison that we can talk about a little bit later with another project that had a lot going for it that I think is an interesting comparison to Omi.
All right, cool. And in terms of trading, right? You got into technical analysis. When did that happen for you?
Um, I've always kind of been into some stocks and financial stuff. I mean, when I was a teenager, I remember looking at the paper and looking at the stock quotes and stuff like that. So I've always kind of had a head for money. And I had made a bit of money off a stock that I bought in 2007. So I mean, I've been doing this kind of stuff for a little bit, but not like trading hardcore like I do now. It was probably, you know, about this last market cycles when I really started to really crack down and focus and really take it serious. Probably at the beginning of the bull cycle, last market cycle.
Yeah. And what
Before that, I was
you
more of an investor than a trader.
do you consider yourself more of like a long-term investor or a trader or a mixture of both?
I'm more of a trader, but I distinguish what I'm trading and what I'm investing. Um, so if I'm investing, like now, I'm not trading OMI anymore. Um, I'll say I'm an OMI investor. I have a HODL bag, and I'm not too worried about the daily price movement. So if I'm investing on something, then if it's just a good general market price to buy it at, then, you know, just buy it and don't worry about it. And that's the best way to do it. So I try to distinguish what I'm investing and what I'm trading.
Yeah. And so now, you know, Bitcoin, we're going to talk about the market. We're going to start with some Bitcoin blockchain comics. I know you want us to get into that Bitcoin and traditional and the macro. So we're going to jump into Bitcoin and the whole market. And then we're going to talk about OMI price and where we see it going. Let's start with Bitcoin, which is up something like almost 70% year to date. I believe it's the best, it's the best performing asset of 2023 so far, right? And a lot of
Mhm.
people are on the fence about whether or not this is just, you know, a bear market rally, or if, you know, it's sustainable and, you know, we started the next bull run. So where do you sit on Bitcoin? And do you want me to share that chart right now?
Um, if you want to go ahead and get into the chart, then yeah, we can definitely do that on the whole market cycle. Yep.
Yes. Where do you stand on Bitcoin and where we're at right now?
Um, so I think it's a little bit of both of what you just said, starting a new bull run and a bear market rally. Now, I think it's a bear market rally. So let me say that. But if it repeats like the last cycle, then I think what we could possibly see is a higher low in the neighborhood. And I think that's a very good comparison because um, won't let me move it on the screen.
Yeah.
Can I? Is there something I can do where I can move the chart?
I've never done it from your side. What do you want to do? You want to bring it? You want to enhance it?
So where I can like control the screen.
That I don't know.
Hold on. Let me try it like this. Okay. Can you see it? Okay.
Now we can see it.
Okay. So, and I know we got a lot of stuff up here, and we'll talk about it. But last market cycle, this was the low. This was the bear market low, and then this was the COVID crash. So the COVID crash was a higher low, but it was in the neighborhood. And I think this is a good comparison because what's everybody scared of now? They're scared of bad news. They're scared of all the bearish news out there, where there's interest rates, inflation, World War III, U.S. regulation. I mean, there's a lot of things, but this was pretty bad too. You know, people didn't know what was going on. Pandemic, they didn't know how bad it was going to be, and they were being told a lot of different things. So that's a pretty bad news event as well. And we're going to talk about some of these things and compare times and highs and lows and things like that. But it was 462 days in between the lows. So these things can take a long time to play out. And if you want, we can go ahead and go to the beginning of the history of Bitcoin and look at some of this market cycle stuff to why I'm saying some of the things that I'm saying. And just before we get started, you know, just a few things about why Danny has me up here. Not to boost myself up or anything, but he didn't just find me in the comments on Twitter and was like, "Hey, you want to come up here?" I sold all my Bitcoin at 68K. I bought the bottom recently at 15K. I sold all that when it was at about 24K, and then it was back to 20K. I bagged up again, and when I at 15K, I deployed as much funds as I really had access to at that time, because I thought this was a bottom that we were seeing. Also, I posted my OMI trading history, 60 straight days, no losses. I went on a streak one time. I hit 21 straight Bitcoin trades in a row. And Danny's seen all this behind the scenes. A lot of people in a Telegram group we're in. I post most of my trades up there. So they see me saying it beforehand and as the trade's going on. So, you know, I'm certainly telling the truth about all this. And some of these things on why I think where we're at in the market cycle and where we could expect to go, that this is what I'm basing it off of, is the Bitcoin history. I'm not basing it off a chart of Nintendo from the 1980s or Amazon from 20 years ago or some .com bubble. I think that stuff's fun to look at, but we're looking at the Bitcoin market cycle, what Bitcoin's done and what we can take out of it from what it's done in the past. So if we go all the way back here, you can see, so in Bitcoin's history, whenever it has a bull cycle or bear cycle, there's always like a counter trend cycle within that cycle. So the same way the halving every 4 years sparks a rally, every time, whether the bull or bear cycle, about 2 years into that, there's a counter trend. And this is going back pretty far. And this is in 2011, where I put bear market rally in quotations, because it wasn't really like a rally necessarily. The market cap was low. So you had this kind of parabolic time, but it spiked, but it was still in the same time frame. Then you had a 93% drop. So that's why I think it's,
just to put that into context.
Yep, 2011.
Okay.
So as we keep going, now we're starting to get into where Bitcoin's forming some all-time highs and making some market structure. So this is 2013, the first all-time high, and then the bull market had a second all-time high. Once again, you get the counter trend within the main cycle, 74% drop. Then from the 2013 after the high, you had a 86% drop to the low. Bitcoin double bottomed, and you know, if you call this a rally, it was an 84% gain with a 49% drop to the next bottom. And we're going to look at all these numbers in a more organized way and compare them later. So this bear market rally was 84%, and I think that's enough to count as a bear market rally, and that's still a pretty good gain. And
which
then
is pretty similar to where we're at now, right? Right now we're at about 70%.
I think we're at 78%, but I have that data.
All right, cool.
And we're going to compare it all. And this, so then when the bull run came, went parabolic, and this is an outlier here, like 12,000% gain. If you bought the bottom and sold the top is what it would be. But I think this data is very relevant for now. So you get the all-time high, and it was just one. You didn't get a counter trend in this cycle, in this bull cycle. So it doesn't always happen. But that's a bull cycle, and we're focusing more on the bear cycle right now. So you got an 84% drop here to the low. And like we just talked about a minute ago, this was the low of the market. A little bit over a year later, not quite a year and a half, we got the COVID low. But the bear market rally was a 330% gain, and then we had a 72% drop. And then after the COVID rally, and another thing I have in here is when it's down at these lows, how many days of accumulation it was, and also distribution on these bear market rallies. And from all the significant lows, the COVID low is the only one that I will call a V-shaped recovery. All the other ones had accumulation periods of 4 to 5 weeks. So I think that's important to note too, on some of this data that we're going to look at. And then the most recent bull market, and like I said, we're looking at bear market data, but you still had the counter trend within the main trend. And I think this is relevant for now too, because it shows we made an all-time high, and then 210 days later made a new all-time high with a 55% drop. And a lot of people might remember that's kind of like a bear market during the summer. A lot of people called it a mini bear market. They didn't really know what to call it or what was going on. And it's just a repeatable counter trend cycle that seems to happen every 4 years, no matter what the market cycle is doing. And then obviously we get the dump all down, and these fractals over here, just to talk about these real quick, this right here is a fractal of the 2019 bear market rally. So if we put that on the breakout from where this bear market rally broke out, that puts us at about 50K. And I know that might sound far-fetched to a lot of people, but I really don't think it's as far-fetched as we might think. And I'm not saying, you know, for sure we're going to 50K, pack your bags or anything like that. But this is a weekly chart right here. And this big candle right here has already taken out the most relevant swing high. This right here isn't on the weekly basis, isn't that relevant. If you went on the daily, that probably forms a little bit more market structure, but I don't think it's all that strong other than that it being 30K and a round number. I mean, you get this strong candle up and then there's no price rejection. Price is just staying up there. And when you look at bull flags, that's what you want to see. The price staying in the top part of that flag, and that signifies more upside generally. I don't, it's hard to call right now. I would probably say in the short to midterm, I'm thinking kind of like 60-40 up. But we could definitely get, I mean, this is a lot on the weekly, so we're zoomed out. I mean, if you just had a red candle to come down to like here, I mean, that's like 26K, and that's from the current price, a lot of people might call it a pullback. But anyway, and this fractal right here is from the 2017 all-time high. So what played out after that? And if you look at that fractal, that also takes us to about 50K. So there's a little bit of confluence there with the fractals and also with the market structure, how this candle has broken above this, and there's not a whole lot stopping it to reach up to that high. And to try to reach up to that high doesn't necessarily mean it'll happen. A few other patterns we can look at here. This falling wedge here, you have the 3 pushes down, 1, 2, 3, and that's the main thing. And if we take a measure and move from this fallen wedge to where the wedge broke out, that gives us right at 30K, which lines up with this minor high over here. But 30K is still a respectable number, and markets like to hit even numbers. So that's some confluence to show that maybe it's just a little bit more left in the trend, and that's certainly possible. Let me erase this. Another measuring move we can look at is this range down here from these candles. You take the high to the low and move it to the breakout, and that puts us about where we are now. So that would signify maybe the run is over, possibly, or you can take the bigger range from up here all the way to the bottom and see where that puts us, and that would put us at about 39K, 38K. And I think that is a logical scenario. Somewhere around 36, come up here and hit these wicks and make a lower high and then come back down. But all this data, you know, talking about the numbers and days in between, it's hard to visualize it when you look at it like this on the chart. So
Yeah. Go ahead.
Go ahead, Danny.
Now I was saying it's super interesting to look back at. We get caught up in day-to-day, you know, numbers and looking at charts on a daily basis, but to zoom out and see, you know, historically what's happened and use that as a reference is interesting, right? Because a lot of people would, you know, we tell them 50K is, you know, a lot of people would think that that's crazy, right? But it's done this historically, right? Seen these bear market rallies and where it sucks you in and you think you're going to that new all-time high, and then like, you know, the rug gets pulled out from under you a little bit.
Yeah, for sure. I mean, it's possible that we could hit 50K and then make a new low before the halving. I mean, the bull market of 2021, the all-time high was April. Then we had a 50% drop, which is the drop. When you go down, the number is going to be lower, and when you go up, the number is always going to be higher. But so 55% drop, and then made a new all-time high, and that was all within like 6-7 months period time. So the market can move a lot more than what people realize. So if you look at the drop from all-time highs, and all this data will come together and mean something. And that's why I'm saying, like, I'm showing my work. There's a reason why I'm saying these things. I'm not just saying it based off charts from 30 or 40 years ago, like I see a lot of people on Twitter doing. And that's fine. I mean, that stuff's fun to do, and I'm not saying there's no connection between that, but Bitcoin's been very repeatable every 4 years, not only with the rally at the halving, but also with a counter trend cycle within the main cycle for the bull and bear cycle. So anyway, what some of these numbers mean, the drops from all-time highs, you see what we have here. So far, we're at 78%. 10K would be 86%. So for people calling for 10K, that's what it would look like, which could be, you know, that lines up with 2013. So that could be in the cards. And the bear market rally gains. So the 2015 one was kind of weak. 2019 one was strong. This one, so far, we're lined up with the 2015 one. And you're going to see a lot of similarities with both of these market cycles from 2015 and 2019. So the drop from the bear market rally, and I added 2011 in there too, because we can kind of use that data. But this is what's interesting right here. So are we going to do more 330%? That takes us up to 50K. 84% or thereabouts, that could take us where we are now. And even some of those other confluence I showed around the low 30s, you know, that's in the neighborhood. You know, these numbers, this is going off the weekly, and you know, there's probably a few percent give or take either way. So far we're at 84%. So here's what's very interesting. If we're more like the 2019 cycle and go up 330% and drop 72%, because it was a bigger drop in that cycle, and that's because it went up higher. So it goes up higher, it'll come down more. That would, and you can take a calculator, that would be 14K. If we hit 50,000 and took a 72% cut, that's 14K. So if it's more like 2015, where we're kind of there now, well, you know what half of now is. The high has been like 29,000. That puts us at like 14, 15K. So both scenarios still point back to that same area that we were in, maybe 14K. You know, that technically, if you do these numbers exact, they both work out to about 14K and 14.5K. I think it's possible to make a higher low, but that's not something like I'll stake my reputation on. Will definitely make a higher low. It can make a lower low, or it can make a double bottom. I mean, the last two cycles have double bottom. Bitcoin just likes to double bottom in general. So I think that we're going to get another low in the neighborhood of that low. And now where that could be, I mean, I think anywhere from 14 to 18K, if I had to say. I don't think it'll go to 10K. And we can talk about that in a little bit. But some of these other data points is time. And this is important too, to kind of see where we're at. So the all-time high to the first low. And you see these numbers are all relatively similar. And between bear market lows, so the double bottoms, 2013 and 2017 did have a bit of a difference there. 2017 was much of a longer double bottom, and we're currently at 147 days from the first low.
147 days out from the low.
The first low.
Bottom.
Yep.
Right. First bottom.
So if we're more like 2015, like we've been saying, and the rally might be coming to an end now or soon, well, then this could line up with that. Maybe. I think it'll be longer than that before we made another low. It could be somewhere in between these, but so between all-time high and bear market high, now these are very similar. So I think this is very important because this can kind of project when we could see this rally end, maybe somewhere between 1 to 2 months. And that could be the difference between maybe hitting 30 to 32K or maybe 50K. If it goes up then maybe we're closer to this number. If we hit 50K, maybe low 30s, then maybe here. But this is pretty interesting that they're fairly similar. And then the first bear market low to the bear market high, because we've had the one low already. So You see in 2015, when the rally wasn't that big, it wasn't that much time. In 2019, it was over 6 months. Right now, we're currently at 150 days. So that puts more confluence into what we were saying up here, that, you know, maybe another 6 weeks left in this rally, potentially, to match up with previous market cycles. And then the bear market high to the second low, because this is what we really want to know now. And this is going off weekly charts, but you see 2011, 2015, it was both 161 days. 2019, it was 259 days. And depending on which market cycle we mimic, if it's more like 2015, then I think the bottom would come in about 5 months. And if it was more like 2019, it would come in about 9 months. And well, 9 months after the rally high. So if we're looking at the rally high to be in maybe 6 weeks, call it 40 days or so, and then if we take the data from the 2015 market cycle, then that equals the 5 months tacked on to that. So basically, the halving is supposed to be April 18th, 2024. And if we repeat the 2019 cycle, that would mean we still have some more ways up to go, maybe up in the 30s, 40s, maybe even 50. And then we would come back down, make a double bottom, which I know it seems like a lot of market movement, but that's still like a month or 2 months before the halving. And that lines up with this over here with 2019, where we got the V-shaped recovery, and that's kind of what you see. So I just feel there's a lot of similarities with this, that we could get a bad news event, a really big drop that's closer to the halving than what people would think, and then get a V-shaped recovery and be off to the races again. I think that's very possible. And this accumulation distribution data, I think, is interesting too. And it kind of lets you know there's no need to FOMO or panic sell or either one of those, because every time it's at a high, the time that it spends up there before it goes or low is about the same. You see in 2013, 35 days at both all-time highs. 2017, there's only the one top, is about 28 days of distribution. In 2021, both times, it was about 4 and 5 weeks. And it's similar at the lows. But I think this is interesting here, because you get a bigger accumulation period here, and then you didn't get another one. Oh, you got a V-shaped recovery. So you didn't really get an accumulation period. And you see the accumulation period we had earlier, and this was actually 2022, but you know, close enough, was closer to this. So that lines up with that same confluence of potentially seeing this, a bad news, a big drop, and then a V-shaped recovery. And then this is just more data about the distribution at the bear market highs. So if we do reach a high, how long can we expect to be there? And at the current price range, we've been there for 21 days. And these were how long it ranged before. So if we're going to move up, we need to go ahead and move up soon. And I think a move probably is coming, because the Bollinger Bands on all time frames are getting pretty tight. And I think that a move probably will come fairly soon.
Blockchain had a question for you. Thoughts on 3 straight was dojis on the weekly?
Well, if I kind of look at it like a bull flag here, and that's what you want to see on a bull flag, is not much rejection, that the price stays in top like that. And you can look at it like that, or you can look at it like we're not getting more follow through and push up. But it's still, if I'm just looking at the technical analysis, and I'm not thinking that worrying about the news and stuff like that, then it still looks like more up to me. And here's what I think could possibly happen, is that this can make a rising wedge. Maybe it comes down like here and touches the 20 EMA, and we cool off a little bit, and then we go up here and hit around 30 or 32K. And then, you know, it comes back down eventually and whatever. And I like this scenario because it makes a nice rising wedge and a double top with over here. Even though I don't love that high, it is still a high, a minor high in my opinion. So you're putting two patterns together there, a double top and a rising wedge together at on the same pattern. And that's really good to do whenever you can do that.
Got a super chat here from Jordan Riz. He's appreciative to have you on. He said, thanks for getting Ron on, Danny. You the man. Yeah, Ron's got a lot of good insights. We've been chatting through Twitter for about a year, I think, right?
Yeah, maybe even longer than that. I think you've been in the Telegram group for at least 6 months, if not longer.
Then you hit me up to join the Telegram, and we've been chatting in there with a bunch of other guys. So I've gotten to know you, and definitely Ron's definitely a real smart guy. A lot of good insights into the market. So just to kind of like summarize that, you can see this rally extending some more, but eventually we're going to see a double bottom, right? And we're going to get an opportunity, in your opinion, there's a good chance we'll get an opportunity to grab some Bitcoin in, if not sub 20, definitely like low 20s.
I feel the most likely scenario is a higher low off of bad news driven events, and then maybe not much time to accumulate at those lows. I think that it could even be, within 6 weeks, 2 months of the halving, possibly even before that happens. Yeah, I think that's the most likely scenario. I don't count 10K out of the question or anything like that. And I said this, Danny, at the end of the year and on Telegram, I felt if we were going to make a push down lower, that it was going to come at the end of the year. And the reason I say that is because at the end of the year, people are looking at big time frames. I don't know if this is going to mess the chart up when I do this. It's little. See, yeah, it's a lot of stuff up here, but I can still kind of see. So I thought there's like these gaps over here, and if we were going to come down and hit those, then I thought that was the time for these gaps to get filled. I know you can't see it the best because all of this stuff's up here, but I thought that was the time to hit those price levels, because people are looking at these huge time frames at that point, and you get more like big money involved. And if they didn't try to push it down then and fill some of those gaps at like 13.4, like here. So, and this is called a gap. Like when the price doesn't hit this, it left a gap. So I thought at the end of the year, that was the time if they wanted to fill this gap or even this gap to 12K. And then there's this one here at 10K as well. So to either hit this or this could all have been possible, but it never made a push down. And the fact that it came down here and did not fill these gaps, I actually consider that bullish. The analogy I kind of think about with this, like in track, the relay where they like run and they pass the baton. So it's almost like they're trying to run down and pass the baton to one of these, and maybe then have the bears grab it and keep pulling it down, and they couldn't get there. And when it didn't happen at the end of the year, I thought good chance for a rally, and we got it. And I slaughtered it on that rally, trading up the whole way up.
What are your thoughts on? We're going to get to OMI in a minute. Everyone in here, I know we're all holding OMI. Want to talk a little bit about Ethereum. Are you done with the Bitcoin?
Unless you want to go over like some like the trades and going over like how I trade the market and stuff like that.
Sure, we can do that.
Sure, but I got some good info on ETH too, in relation to Bitcoin. I don't trade ETH as much. I used to trade it more, but I just kind of feel I just stick with Bitcoin and maybe use a little more leverage. And a way that I trade is, if I had to verbalize it, it's based off big candles in the 20 EMA. So on this move here, once I saw this candle, a decent sized candle coming up, closing on its high, breaking above this structure, I was like, hey, this is it, we're off. And I set orders here. And then, I like the 20 EMA. It comes down, finds support at the 20 EMA. I'll take that. And here's how I do that. I'll let the candle that found support and goes that direction. And it doesn't matter if it's bull or bear. If we're going down, you know, to be a good trader, you have to be ambidextrous. It doesn't matter if it's going up or down. I try to look at it the same way. So I would set an order there. Well, that's a short. Above that candle, you always let the candle close. And we're on the 4 hour here. Normally I do the hourly. But I would put it just above that candle and then put it maybe below the candle in the EMA. This strategy lends very low risk trades because your stop is tight. So if it doesn't go my way, I don't lose very much money. And normally I set it as like a 2-to-1, and maybe I'll ride it up more. And this 20 EMA strategy, it works on all different time frames. Let me see, just because I normally do off the hourly, and you probably see it a little bit better. But if the 4 hour EMA is far away, then I'll go to the 1 hour and I'll watch what it does when it hits that. And you see, I mean, I left these up here on the chart. I traded off the EMA over and over again. And it's a good thing to do, like, once the market is in trend, because once you've got some movement up, lots of times people, they don't know when to get in the market, right? They're confused about that. And that gives you a good target to do. Well, we've already got to move up. Well, I'll wait till price comes back to the 20 EMA. Sometimes people ask me which one. Any of them. Just look at any of them and just watch how price reacts when it goes up to it. And if you get a bounce off of it, set an order above the candle, like a stop or entry order above the candle. And if price keeps going that direction, your order will get filled and you go with the price. And if not, if the price doesn't go that way, your order never gets filled. And even with this 20 EMA strategy, the risk is low. So it yields very good low risk trades. And when I say big candles, I'm always looking for a big candle out of a tight trading range to start a move, like here. Now, you didn't get it immediately, but this was during the weekend. So it's Saturday, so a lot of times you don't get much time during the weekend. So big candles, you want to enter on them when they're coming out of a tight trading range. And that's how I initially think a move is coming. Sometimes it doesn't work out. There's one in here where right here. Yeah, I kept it up here. No, it wasn't this one. See, this one I didn't get in, or it was one similar to this that I'm going to show that, you know, I don't always win. And these are just more trading off the 20 EMA, same kind of thing, tight trading range. Breakout candle, I put a stop above the breakout, then it goes up. Then after it's in trend, then I'm trading off the 20 EMA. This is the one I was talking about. So you get a tight trading range, big candle. I set a stop order above the high of the candle. The next candle wicked up, filled the order. It, you know, came back down. If I would have set the proper stop, probably like here between below the swing low, then I would have actually been okay. But that's kind of big risk. And when I do this, I actually set 1-to-1 trades normally from this strategy. When it's in a tight trading range and you get a breakout candle, normally I just set a 1-to-1 based off that candle, and I don't really intend on getting the stop hit if it's low. But if I don't get the follow through I want to see, you know, I'll get out. But that normally doesn't happen. And coming back down here when we were at these low levels, this is when the rally started. And when I saw this candle, this is when I really rode this trend up. I think I deleted some of these windows, even though I leave them on the chart a lot of times. You get this candle closing above all this structure over here, a decent sized candle, and then you had follow through. So I did the same thing. I set a stop order above that, stop below the breakout, and then just rode it up off the 20 EMA. I mean, it looks easy going back now looking at it, but I'll tell you the hardest thing about doing that when this was going on was doing it despite everyone saying that it's a scam pump, it's a bear market, it's, you know, all those things. That's really the hardest thing to go against. And I try as hard as I can not to listen to the news and do my own analysis. But we're all human at the end of the day, and it's really hard not to let those things get into your head.
Yeah, I would think that's the hardest. They always say that's the hardest part, right? Is controlling the emotions.
Yeah. So I'm going to show you about ETH. Um,
Yeah, Ethereum has been strong. I think it's at 1850 or something right now. And we got the
yeah,
Shanghai upgrade coming out in I think 4 days or something. A lot of people were expecting a sell-off.
markets like to hit round numbers, so I think it's very logical to think Bitcoin will hit 30K and ETH will hit 2K because they just like to hit round numbers. I've been told that's one reason is rich people like to use and whales like to use round numbers to make doing their taxes easier. I don't know if that's true or not. But
It's like a
when you
psychological thing.
whoops, I mean to. So the orange line is ETH, and we all kind of know the concept that Bitcoin moves first, then profits can roll to ETH, and then you have an alt season. Well, this is on the weekly, so it zoomed out a bit, but that is what you see. Like Bitcoin, this is up at well, because I have them overlaid, it doesn't show the numbers over here, just a percent difference. But this one we were at all-time highs in April. So when we were hitting these all-time highs up here around 50 and 60K, ETH was way down. ETH had not made its move yet. ETH didn't make its move until Bitcoin was almost done with its move.
Yeah.
Yeah. And the one time I remember ETH leading Bitcoin was when we got out of this like summer bear market over here. And the move from ETH did go first from Bitcoin. And that's really the only time that's happened. So this thing's kind of aggravating. So you do see normally Bitcoin going and then ETH making its high after Bitcoin's already had the move. And if we see that here, ETH still kind of going up, Bitcoin's stable. So that could be a sign that the Bitcoin rally is ending. You know, ETH's going to have its day, and then maybe an alt season. You know, I'm going to definitely be on the lookout for that because BTC dominance is really high too. It's getting close to 50%, and that at some point you can definitely see that trend down to 40. And there's two ways that can happen. If we have the scenario I just explained, where Bitcoin kind of just stalls and ETH has a little bit of a run up, then you can see the market cap, total market cap, stay the same and BTC dominance fall, and that's when it's alt season time. But if BTC falls and dominance falls, and it's just if BTC falls and market cap falls, then dominance will just fall with BTC. That just means people are selling out their alts, and that's just bearish all the way around. So there's two ways the dominance can fall. But if BTC holds and dominance falls, and we're kind of seeing ETH still going up, then yeah, get ready for some blow off tops.
Yeah. And let's talk a little bit about OMI. So OMI's been sitting in this 0007 range. A lot of the market has moved off the bottom. We've seen a lot of gains in other coins. OMI, of course, is back near, its bottom. I think back in November, it first hit that 000 level. And we're back there, obviously, due to the negative sentiment, the lack of real progress in terms of, OUP and other things. Do you think now is a good time to buy OMI? Are you still bullish on it? What are your thoughts there? I know you're a bag holder.
I don't think OMI is what it once was and can do the projections that we once thought. I don't think that $1 OMI is something that's possible anymore. I think a lot of those projections were based off the burn, and I mean, I don't even know what they're saying the burn will be, or if there ever will be. But I stopped listening to the AMAs and kind of trying to keep up with what's happening. I still think that OMI can have a run, but the projections that we thought at one time, I don't know about that now. But I think it can be a good time to buy OMI. I mean, it's a double bottom, but it's not just that it's a double bottom, it's how it double bottoms. So you get this big bounce off that level. And that matters when it hits a level, how it bounces. and I have a diagram. I refer to this sometimes because that matters how the bottom is formed. So that means it's strong support there. And when it got over here, it bounced pretty good again. And this is the daily, so we're zoomed out a little bit. That's a pretty good candle as well. Not as good as that one, obviously. And then even when it got down there, again, it wicked up. So, I mean, if we start to get some green, stringing some green candles together out of this area, then I would say, yeah, for sure, we can go up. Now, if it doesn't, then the scenario that I have, maybe even go to the weekly. I thought I was looking at this on the daily, but you know, this whole thing could end up being kind of a falling wedge. And if that happens, and this is like a big time frame we're looking at here, so I'm not talking about this happening anytime soon. But if it broke out of that wedge out here somewhere, then you know that's the measured move that we would get there. Now, also, what could potentially happen? Say, let's put that line a little bit. Say it extends out like this, and OMI goes up the top of the channel and gets rejected. And now, when it starts to ride this line down, I mean, it could get really low. I mean, you're talking about very low prices. I mean, it's the weekly, so it's zoomed out a bit, and you're getting negative numbers over here, which obviously can't happen. But when I did this on the daily, it looked at like 0.04 is where this trend line.
0.04.
Yep. That's where it kind of projected out to. And this trend line's got some pretty good history on it, especially when you look at it on the daily. It's got a lot of touches on it going back a long time. And the more touches, the stronger it is. So if it goes down to want to touch this trend line again, then, you know, it could go really low. Yeah, because since when BTC made its bottom or the low at 15K, OMI was at like 0.0009. So the fact that BTC has almost 2x and OMI's went down 25%. However, when you look at it on coin market cap, it's still got a $200 million market cap. That's big. And I got CoinGecko up here too, because sometimes there's slightly different data, and it says the same thing. The rankings on them is different. It's 190 on coin market cap, and then something, way up here on the other one. That doesn't really matter. What matters is the market cap. And I don't think a market cap when I'm trading or anything, but when you're projecting and looking at things and what they could go to, then the market cap's fairly significant. But if I was somebody that had come across OMI in this bear market, I'll be honest, I would like it. If I was an objective investor and I came across OMI, I would like it.
Because it hasn't made the move yet.
Well, yeah. Well, if I came across it objectively, I would read positive things about it. Well, the things that we think are positive, the IP, all these things.
Right.
And I'd be like, wow, this, right. And I like, it's got a real project. It's got an app, and wow, they're still getting like $100,000 a day, many times loaded onto the app. And then I see that it hasn't gone up against, even though it's still at a decent buy price. And then when I look at where you buy it from, and it's only on a few exchanges, like I said, me being if I'm an objective person and I'm not into OMI already, well, I might think that's good for bear market holding, because what about when it gets listed on Coinbase or Binance? I mean, it's a big project. Surely that's going to happen. And like I said, I'm looking at the scenario I'm saying is, I don't know a lot about OMI. I came across it through bear market research. I would actually think it's okay. And I think that the people on Twitter, lots of times, that get so bearish and talk about manipulation, they're not. When you look at a $200 million market cap, 1 billion OMI at current price is $750,000. So if somebody had 10 billion OMI, that's not even a dent in the market cap. Not really. And they can't just dump that. There's not enough buyers to do that. I'm not saying OMI's not manipulated, But I think that the cries from the community about how it's manipulated and stuff like that, I don't think that that's all they're always on target with that.
Yeah.
But when I said,
Go
go
ahead.
ahead.
No, I do agree that, sentiment is down and it's beaten down, but all the catalysts are still there in front of it, right? So we saw back in November, we were at 0007. Then the article came out, that OUP article came out, and we damn near went to, I think, like 002, right? It like tripled just off the strength
Yeah,
of the OUP article, right?
yeah,
So if we get the VV-verse is supposed to come out later this month, and then if they get that wallet done and they move towards utility and they get an exchange like Binance, you could very well then see the FOMO kick in again and people get bullish and that sentiment change. So those
for
gains
sure.
could be there.
Yeah, and a lot of people might not know this. CryptoPunks, I would have to say that's the top NFT out there. CryptoPunks, they used to be free, so things can come back a lot higher. And this is crypto; it's crazy. Don't ever count anything out. And if you remember, I said earlier, and now that's kind of the bull case for an investor stumbling across OMI on the bear market. If you remember earlier, I said I was going to compare OMI to another project. So this isn't a NFT project necessarily, but it's a project called Dragon Chain. And if you've been in crypto for a little while, you might have heard of it. Me and Kay have talked about it before. So I'm going to scroll down and read you some of these things about Dragon Chain. It was created in Disney, and developers in Seattle. That's a good place to develop a tech startup. It was doing this proved interoperability to connect to Bitcoin, Ethereum, Binance, Ethereum Classic. It could all these different coding languages it could work with. This right here, I've read before that when this happened, they set a record for being the fastest blockchain ever. It doesn't say that here, but 250 million transactions in a 24-hour live stream. And they even got some kind of contract with the government for some kind of COVID thing. You're like, how is this not like a top 5 project in crypto, with all this that it had going for it? But it never materialized. It never really materialized.
Yeah. So what you're saying is you could have that narrative and it could seem like a great play, but it doesn't work out all the time.
Yeah. I mean, what else could they have had? All that stuff I just listed, and now the market cap is 2.5. You know what? I might actually buy some. I feel bad for them. It's $2.5 million market cap. If it comes back at all, then
did they have a community?
Yeah, BitBoy even did a video for them. So there were some people that's really into it. I still see some people that on Twitter every now and then that talk about Dragon Chain and it'll come back and stuff like that. I don't think it will, but I mean, you just read all that. That's a lot of bullish stuff, right? I mean, how is that not one of the top projects in crypto? But it's not, and never was, and probably never will be.
Yeah, so that's a good reminder to always, you have to measure your risk, right? You can't, nothing is guaranteed, and always just, be willing to, you have to, like everyone always says it, put in what you're willing to lose. George had a good question here. Does the amount of FUD in a project correspond to a bull market high? Have you noticed any correlation in that? I've got a thought on it.
What do you think, Danny?
I think that sometimes when sentiment is really low, and then they turn things around, that it could come out battle tested, so to speak, right?
Yes.
So, for instance, go ahead.
Yeah, and I was going to say, and that is actually Wyckoff's third law of markets is the longer it consolidates, so the more it goes down, the higher it'll go up. I can't remember exactly how it's worded, but that's Wyckoff was a trader from back in like the 20s, so that's been a thing for a long time.
Yeah. So yeah, I do think that there's something to that, and there's something to being battle tested, right? And getting knocked down and picking yourself up again. So Vivi, the team, has obviously seen a lot of adversity in overpromising and underdelivering over the last couple of years. But if they can manage to now deliver, then I do think that there's something to be said for that.
Yeah, and VV, they're holding all the cards. Well, they were holding all the cards, and they know that. And I try to be objective about this. I read the FUD because I want to be informed on what's going on, but I really try to step back and be objective about VV and Omi. I try not to be a moon boy or a doom boy. And so I guess some examples of what I was talking about. Gosh, I just drew a blank. I had a good example of oh yeah, Wells Fargo. Wells Fargo is a big company and they do terrible stuff to their customers all the time. They're like the most fined bank. They get fined all the time. I mean, I think they just got fined like $2 billion in the past year again. But at the end of the day, it doesn't. People aren't taking their accounts off of Wells Fargo. It doesn't ever affect the stock price. And these big companies, they do things. Corporate companies, they make corporate decisions and they're stupid and they don't make sense. But at the end of the day, as long as you have the product, as long as you have the sauce, then it is what it is. And that's how I felt for VV for a long time. But I know for a fact that these other big IPs are starting to build with other people now. And I think they had such a head start. It was like a can't lose thing. And I think they've really fumbled it. And now they're more in the pack with some of these other, well, maybe not in the pack. It's still theirs to lose. But they got to change some stuff. They got to get with the program.
Yeah, I do agree with that. They had a huge head start and a big lead. But I think Uncle Jeremy said it's a sprint, right? It's not a marathon. And I think they lost sight of that. And these other guys are going to be catching up fast. But the one thing that is super bullish is that the community is strong, and even with the sentiment as low as it is, and all those people who just like, I don't want to say FUD, they're voicing their negative opinion or whatever, they still want it to succeed, right? So they'll still be there.
Why else are they hanging around in the comments? Why do you care? If you sold out the project, why do all these people still hang out and say negative things in the comments on Twitter all the time? Because they do still care, and they're hurt by it because they thought that VV and Omi was going to be their ticket to early retirement and stuff like that. And so far that hadn't been the case. And whether they want to admit it or not, they are hurt by it.
Yeah, there's anger there.
Yeah, for sure. And up here at the top, if you want to, Danny, I got some good bear market buys that I think are good buy and hold. And it goes in line with what you just said a second ago about maybe not falling in love with a project or even a type of project. So when I look at what I'm going to hold for the bull market, what I want to accumulate for the bull market, I try to kind of break that up into like sections of crypto, if that makes sense.
Yeah.
Like smart contract programs, projects, privacy projects, metaverse tokens, layer 2s, layer 1s, all that stuff. This is one that I like a lot. Mask. Now, when I first found it or started trading it, it had a market cap of like 80 million, and that's up. Now it's the market cap's up there a little bit. But when I look at what I'm holding or want to accumulate for the bull market, I do look at fundamentals for that. I might look at some TA too, but Mask, it's just supposed to help facilitate payments through Twitter and Facebook. It's been linked to Doge and Elon Musk and stuff like that, and it has done really well. When I bought the bottom, I bagged up heavily on Mask at about $2, and it went all the way up to $7 here recently, and I actually shorted it then. But Mask is an overall good project. This is another one that I like for a hold. Market cap's only $6 million, and it's a privacy project. And it's got some good things going on. You can like contribute to the network and earn Mask. So, and it's just because the market cap is so small and it's a real project. And I know there's some people, a community out there using it. And I think when you talk about crypto, what real world use does it have? That's what a lot of people say. Well, what good is it? What can you do? Well, I think the first thing that you're going to see is smart contracts at some point. And this is a smart contract project called API 3, $122 million market cap. So, and you know, the market's pumped a little bit now. So if we're looking to buy at lower levels, these market cap numbers will be lower. But I like API 3 as a smart contract project. Quantum is another smart contract program. I like that less, but it's still a smart contract project, and it's okay. Waves is another smart contracts project, and I like that even less than Quantum. It's kind of old, but you know, if you look at it like that and you're diversifying into the sectors of crypto, then these are some options for you. Then metaverse tokens. Obviously, we know the metaverse could be really big. I like Gala. Market cap's a little big right now, but all these, I mean, for anything that's
Gala saw
established.
a run up, right? Gala was running a bit earlier off of some news, I think, right?
Yeah, Gala's had a real big run. I bought a bit at 0.16 at 0.16, and it got all the way up to I think 0.50, if not higher. But Gala has some good stuff going on. They got some celebrities involved. They got some gaming. Gala is definitely a strong project. I was even thinking at one point to get out of OMI and start focusing on Gala, which I'm not going to get that into it, but it's definitely going to be one of my main holds for the bull market. Also, Metaverse, Sandbox, everyone's heard of that. $1 billion market cap, so I don't love that. But you know, I'll watch it if I can get it at a good price. I think that it's still a good project. Decentraland, I like that less than Sandbox. It does have market cap's already over 1 billion. But and everyone's heard of Mana, Decentraland. It's a decent project. Another good, or I don't know, good, but one to look at. I think it's ROFX. That's another metaverse coin for people looking for options. But I like Gala better than these two, Sandbox and Decentraland. And privacy, if you want to diversify into that, this is a pretty good one. It's called Secret. It's like a blockchain where things are secret on it. And I could see this being used by like the medical field and the government and stuff like that potentially as a privacy project. Mask is also the one with a Q. That also falls in line with this to be a like a privacy project. And probably my favorite project in crypto is Monero. Not that it'll make you rich. I just believe in it a lot. It's got a good community and really good devs, and the way that it's done is really good. And if you don't know about Monero, then just for your own personal benefit, you should do some research and check it out. But it's kind of like a privacy blockchain as well. Layer 2s, I think that's a good thing to be vested in. Arbitrum, I did the pre-sale on this actually about a year and a half ago, and I'm surprised that it has reached up to 39 in market cap. So it's already got a market cap of over $1 billion, but it's a good layer 2. You know, if you want to diversify into some layer 2s. I don't have IMX and Matic are the other two layer 2s that I would look at. IMX I like a lot. Matter of fact, IMX is going to be what I focus on trading now that I'm not really trading OMI. And then I think it's good to have some, I mean, shit coins. I know a guy last market cycle who put $2,000, $100 in 20 different shit coins and got $48,000 from it. And this is one that could be potentially good. It's called Solana Cash. The market data is not even tracked, so you don't even know the market cap or anything like that. But it's a P2P payment system. My friend Eric, I talk about sometimes, he found out about it, and he said the way it was presented to him when he researched it was kind of like Cash App on the Solana network. Wager, this is a gambling token. And I think that crypto and gambling is something that could still it just seems like a marriage that's waiting to happen. And really low market cap, less than $1 million. At one point, it had a market cap of over 10 million. They have a real website. It's got a link to it. Yeah, they have a website. You can go there right now and gamble and do all kinds of things. So that's a good low cap one potentially. This Medicaid, it came out recently, I think it came out. I think it came out recently. Yeah, it's only been out for a little bit. Market cap of 24 million. So it's can't remember exactly what it does. This is like a gaming token, did some stuff like that, but it was new with a fairly small market cap. And this is another small cap, Rose on. They have a launch pad, some gaming, some things like that. The market cap is about 2 million, yeah, 2.5 million. So that's a good small market cap token as well.
What about AI? You have you done research on some AI tokens?
Yeah, a little bit. For instance, Chat GPT had a token, but every time I tried to buy it, there was no liquidity on Uniswap. But I'm glad you said that, because there's two other categories: AI tokens, and I've heard something recently about some China coins or something like that. Like there's some, I need to do some more research on that. I don't know if exactly what that means, if there's cryptos coming out of China or they're only available on Chinese exchanges, or what the case is, but I need to check that out as well. Something I've been hearing about recently. But yeah, that's a pretty good list of projects that I'll look at, and the reasons on why I'm looking at them, for things to accumulate for the bull market. And just to point out, from last bull market, or last bear market, excuse me, if you just DCA'd during the bear market, then let's say you would probably get an average price of something about right through here. Like that seems reasonable, right, Danny? Like if you just bought $100 a week and didn't care about the price at all. I mean, sure, you were been down here, up here, down again, but you probably would have had a average price of about 6,700. Well, that would have been a 10x just off of Bitcoin, like with no stress.
Provided you sold.
Yeah, provided you sold. And you never know what the top's going to be. But I guess the point I'm making with that is, don't forget to DCA during the bear market. And like, I just bought this Mass Q. I bought like $500 of it a day. It's as low as it's been in a while, actually. Not this one. Yeah, here, the Mask with a Q. Not all alts follow Bitcoin 100%. I mean, we talked about that with Omi a little bit. So, trying to catch the bottoms all the time. When we were down at 16K and people kept talking about 10K, I thought, no, we're in accumulation right now. If you looked at Binance, the biggest volume in Bitcoin's history was when we were at that level on Binance. See, when we dump down here at these low levels, look at this huge volume.
Yeah, huge spike in volume.
And to me, that points towards accumulation occurring at these low levels. So I felt when we were at 16K, calling for 10K was kind of like, being at 70K and saying we're going to go to 100K. So I kept buying at 16K. I mean, I did buy like this day at the very, very low. And you've seen screenshots of that. And I posted about that I bought at like 15.5. But it's no different if I'd have been buying over here at 16. I mean, it's cool. I can beat my chest and say, yeah, I bought the bottom, whatever. But it's really no different for profit as it goes up here at like 16.3 and 16.5 or whatever,
Yeah, it's super important. One of my rules is don't be greedy to the downside. Don't, everyone, kind of gets caught up on trying to time the bottom. These things are kind of like impossible. It's impossible to time. And if you just stick to your strategy, and that's more in line with my strategy, is kind of like the DCA. I'll go hard on, big drops, and then I'll nibble, here and there throughout, and, kind of like lay off after a pump.
Yeah. And I think that's smart, because I'm sitting here saying I've bought a lot of bottoms. I've done great at buying bottoms, and I don't think that I'm smart enough to outsmart the entire market and buy the bottom. And it just seemed like I heard everybody saying the same thing. Well, I'm gonna buy the bottom and then load up 100%. And when everyone is having the same plan, well, that can't work out. And you're not going to get an email from the exchange saying, "Hey, this is the bottom." I felt that we were hitting the bottom because, I mean, how many big candles can you get down? And lots of times when you get a big one like this at the end, that's like the final dump. And that's what I felt. And the fact that it didn't close this gap over here, like I referred to earlier, I just felt those were all important things. And that when I talked about earlier, I look for big candles at the tight trading ranges. I look for them out of tight trading ranges. I don't look for them like if you've had a move up and then you get a big candle, that's a sell climax, or a buy climax, whatever. So that's, I think a lot of people get confused with big candles. Well, are big candles good for entry or bad for entry? And it depends on where they happen at.
Yeah. Now, let's talk about the next cycle. What do you think of, how does the threat of regulation play into your plan, or does it? Right? Because I see you're looking to accumulate some small altcoins. Do you worry about regulation hitting the sector, the space?
Yeah, I do. And I was worried more back during this time over here, because I don't know if you're familiar with the library case,
Yeah,
the crypto library. You probably are.
of course.
Yeah,
Yeah.
and they had lost the case. So at that point, the precedent was set as an alt being classified as security. Now, I believe maybe earlier this year that got reversed, if I'm not mistaken. I know they won a case in court.
So
Library.
it was kind of like split. So the ICO for Library Coin, that was deemed a security, right? The way they sold their initial coin offering, it was sold as a security, but the judge stopped short of saying that the sale of Library on exchanges is a security. So Library can still be traded on exchanges, and it's not labeled a security, but the ICO offering was a security sale. That makes sense.
Yeah. So I probably would have bought more alts at lower levels if I wasn't so worried about that. And that's one reason why when I'm looking at those alts, I'm looking at market cap a lot, because if you buy something with a small market cap, I mean, there's more to the world of crypto than the United States. I mean, Binance is the biggest crypto exchange in the world, and you can't even use it in the United States. So that's why, I think it's good to get stuff with smaller market caps to try to accumulate. And then, say you get 10 things with small market caps and 6 of them flop. If just 2 of them pop, then you would have made pretty good, most likely.
So that's your
I am
strategy in terms of those micro cap crypto projects. Your strategy is to find a bunch of them and put, I guess, equal amounts into each.
Well, to diversify in the different sectors of crypto, kind of like I said, like I'm going to get some smart contract stuff, I'm going to get some privacy stuff, and I'm going to get a good holding of low cap, shit coins, to be quite honest with you. But like stuff like that's Solana Cash. I mean, I wouldn't say it's a shit coin. I mean, it kind of is probably, but I'm not talking about, baby Doge, OG, whatever, stuff like that.
Yeah, come
Stuff that
rocket or
has,
whatever.
yeah, something that has like some real something behind it. But I think, diversifying in the different sectors and to try to get, and even when I'm looking at that, I'm looking at the market cap for those kind of alt projects. And I'm certainly not going to go all in on alts. I'd probably be like 40% BTC, 20% ETH, and the rest in alts. Probably something to that effect.
Yeah. And what are you thinking in terms of new highs for Bitcoin, Ethereum? What are you looking at for the next cycle?
Hmm. I haven't really given it too much thought. There's not too many things you can use as leading indicators. You've heard the term lagging indicators a lot, I'm quite sure.
Yeah.
So there's a handful of indicators you can say are leading indicators. And pivot points are one, because they're projecting a move. So if you looked at that, like on a high time frame, like the weekly, and looked at high pivot point level numbers, well, this is close to 100K, the highest one up here. That could be, you could look at some pivot points to try to get some idea. There's also, let's see if something called a Fibonacci extension tool. I haven't used it in a while. But it's a leading indicator as well. Where is it? I know it's so you might could do something like this at the current data, and then you could maybe look at some fib levels based off of that. But leading indicators are kind of hard to come by. And that's why you can look at different kind of measured move stuff, like say, if this was, and I'm not saying this is, if I'm just saying like if we look at this as like a falling wedge here, and say we get more price action down the road and it breaks out over here somewhere, then we could do something like take a measured move from this to that, put it at the breakout. See, and that would just take us to the all-time high. But some chart patterns like that. Another way you could maybe do it is say this was all a range here, and the distance of the range, and then when it breaks out of that range, use that measure move for that, and that would put us at 120K. So there's some predictive ways to look at it. I think Bitcoin's destined to hit 20K. I mean, excuse me, 100K. And I think that'll happen next cycle. I think just based off, if I just had to throw a number out there, I think Bitcoin would hit 150 next cycle.
And
but Ethereum? I haven't done. I think ETH can go to 10K.
Yeah, I'm thinking like 7 to 10 on ETH, and I think Bitcoin will hit 100.
Yeah, you don't think it'll go to 120 or 150?
I think 150 will be a lot. I think 100 is going to be such a big psychological number for people. So I don't know how high above first time around, but well, no one's got a crystal ball, man, right? It's all.
Yeah, for sure. Nobody knows at the end of the day. It's all conjecture. I just feel that an ETF will get approved at that point, but before that, we start getting all-time highs and stuff like that, and that'll be what propels it to those levels. I mean, look, I'm gonna be honest with you. It's not a foregone conclusion that we'll get a new all-time high. I mean, a lot of people are bearish about the news. They say it was because of stimulus checks that pumped it up that much. I'm not really in that school of thought, but hey, there's economic turmoil and war and stuff like that, then hey, anything's possible.
Yeah, 100%. I think that was a good chat, man. We'll wrap it up over here. Do you have any final thoughts for people?
Nah, man. I appreciate everybody who tuned in for checking it out. I mean, you can see that just showing the work on how coming about these numbers. I'm not just throwing it at the wall and see what sticks. I'm really got a lot of market data from previous cycles, and hopefully everybody got something out of it and found it interesting.
Yeah, guys, follow Ron over on Twitter. I put his tag in the description. He's a great source of information, very knowledgeable. Sona Vivi here. He's shorting Bitcoin. Sona's shorting everything, man.
What's Sona's uncle doing though? That's what we need to know.
I don't know. Sona's uncle. Where they at, Sona? I want to thank you for joining. I'll get you back on. It was a good chat, brother. And I will see you on Twitter and in Telegram.
Right on, Danny.
Thanks, brother.
Thanks, man.
Thanks, everyone, for joining. Peace out.